So, I guess everyone is here. Let's start. Okay, so standalone and co-located storage with PV, business cases and bankability in Europe. Today, the topic we are trying to dig into is a bit the difference between standalone PV and BESS and their co-location cases. And the idea is to look also maybe at co-location of BESS projects with other new technologies, in case you have some view about something else than PV. Of course, welcome to express that. Just about myself, and then I will let all the panelists introduce. My name is Fabio. I was lucky enough to close 3 transactions, actually across the 3 technologies, including wind, in the past 2 years in Italy and Germany. And one of my favorite markets, Finland and Denmark as well, that we can cover a bit later. Yeah, so I would like to make this session as interactive as possible, so I will also ask the audience their point of view at some point during the questions. Some of the panelists here were here also last year, so I think it will be interesting to see how things have changed in these 12 months since last time. But let me allow each of you to introduce, if you would like. Thank you.
Hi, Neal Kumar with AmpTank Energy. We're a Finnish-based, although actually Swiss-based developer of battery storage projects. We have about 230 or so megawatts of storage in Finland, either operating or under construction and due to be operating by the end of the year, and another 500 or 600 megawatts of projects under permitting or ready to build in Denmark and Finland. So I guess I'm here to give my perspective on Nordic battery storage and Nordic development and financing, and happy to answer any questions on it.
Thank you, Neal.
Hi, my name is Jan Kloczko. I'm the Deputy Commercial Director for Europe in Greenvolt Power. Greenvolt Power is a developer with a global presence. My responsibility covers 14 markets in Europe. I'm responsible for securing offtake for wind, solar, hybrid and battery storage projects. Currently, we have 2 gigawatts of storage projects under construction and a total 6 gigawatts of storage in the pipeline across Europe and Asia.
Hello, everyone. My name is Preyavart Gadhavi. I'm a director with Actis. Actis is a private equity investor. We invest globally into energy transition as in gas. So when I say energy transition, solar, wind, and batteries. We have done more than 40,000 megawatts across the globe. We are investors in Central and Eastern European region, which means we invest everywhere from Baltics to Romania, Bulgaria, Czech, Balkans. And really, we deploy a lot of capital. So, if anybody's looking for that, that's where we are located.
Good to know. Max von Hausen from Pexapark. I'm the country lead for Germany for PPA and BESS transactions. Basically, the company is an advisory and market data and insights company. We try to help our clients, majorly from the developer and investor side, understanding how to best commercialize their renewable energy and BESS assets, how to value those, and then obviously also go to market and find offtake solutions or flexibility offtake solutions. And I hope to bring a bit light in co-location in this panel today.
Hi everyone, Hannes Langenhan is my name. I'm co-founder and managing partner of Aracari. We are a developer focused on Germany only so far. We develop ground-mounted, large-scale, industrial-scale solar plants, and of course now more and more co-located with battery storage. So happy to be on this panel and bring the developer perspective from Germany.
Hello everyone. So my name is Oldouz Tofigh. I am working as a business development manager for INTEC. So INTEC is a solar developer and EPC, mostly in Europe and international. So we completed more than 3.9 gigawatt in Europe, and these days we have a best projects in Australia, the biggest, one of the biggest one. So happy to be here.
So thanks a lot. It's a real pleasure to be here in this amazing panel and with all of you in this room with this fantastic audience. So my name is Christian. 6 years ago, I was working in a technology company. It's a big group that invested and operated all kinds of technologies. And I tried to seduce, if you allow me the word, EDP to work in a more complex hybridization of, with thermal storage, a more complex type of project, these new type of projects. And of course, the company refused the possibility because it was too risky for the company. But soon after, I joined EDP to help with the integration of more technologically complex projects with new technologies, because at the time EDP Renewables was mainly a wind player, one of the top 5 wind players in the world, but mainly focusing on wind. But now today we have many types of assets, not as many as I would like to be involved with, but we work in a more integrated way with our mother company, the utility from Portugal, EDP, and we have hybridizations with all type of, with dams or hydropower plants. We are analyzing different type of storage plus renewable concepts and developing a lot of these type of new assets, mostly co-located. The company has 29 gigawatts of assets operating and some 400,000 kilometers of networks, of grids. And so it's a medium-sized utility, but now we are more diversified, and I'm happy to be here to explain a bit about our experience.
Fantastic. Thank you, Christian. Thank you, everyone. So let me start with a bit of a challenging statement also for the audience. Standalone PV is dead in Europe. Would you agree with this sentence? And maybe what would you do to improve the business case?
Maybe I start? I think your words are very strong. I would phrase them a bit differently. And I would say that this traditional standalone PV PPA is becoming much more challenging than what we saw the last two or 3 years, where basically any project you would go on the market with would find an off-taker. And I think it's also normal that the market starts to look more into capture rates. Obviously, we are looking into negative pricing that impact highly like the power output that is becoming settled in your contracts. But as well, in general, over time, there was a lot of buyers that bought into solar profile. Then at some point, there's maybe an effect of saturation of such a profile. And I think that's where we're in. So all the negotiations that we see, they're becoming much more detailed, much more focused on BESS that at a later point of time may be added, and as well shifting negative price risk between sell and buy side. And like to come to like this panel as well, like I think BESS is a very good add-on to make these projects more interesting from an economic perspective.
I have to agree with Max. I would say it's very far from dead. We do have a certain bias because we come from the green dream, where whatever you did worked. And right now it's becoming more like a normal business when you have to think about what you do from the very start. So we think we see still quite a lot of interest in standalone PV. The margins are not there, but your margins, I would like to remind you, come not only from the PPA contracts, but also from your DevEx and your CapEx. So if you made your homework first, you would still be able to do some business. And also, you have to get more flexible. and you have to understand where your energy is going and in what way, and then you would be able to sell.
Do you see capex decreasing for PV?
Sorry, your question was the capex is increasing for PV?
Decreasing, I mean, like he just said that
it's going to
margins can be coming from capex
Yeah,
savings.
so the capex is going to decrease, but I just wanted to add on the previous question. I think energy is going through a fundamental transition. While we are doing the energy transition, the business case itself is going through a transition, which is where I think the next generation of IPPs will need to become smarter in terms of what exactly are they developing. I think for a significant period of time, electricity was, a solar project was good enough. It was a utility scale generating well. I think you are no longer as a developer or as an investor just solving for one project. You need to think about where exactly are you in the value chain, whether your project can be dispatched. We all have probably heard about the Californian duck curve, which is the famous Californian duck curve in terms of when the solar generation comes at peak, and then you have to ramp up all the fossil fuel generators in the evening to catch up and meet the evening peak demand. I think this is a trend we have seen there in the US. It's going to follow in Europe. It's going to follow in other markets. So really the question is, does standalone solar projects still make sense? Maybe in some areas it will, for sure. But the real asset resiliency will come through whether or not you are able to maintain that project for the next 30, 35 years. That's a very long time. And so when you think about that, that's where the role of storage happens. I would also add one more point is that maybe assets individually don't need to solve for the larger grid. So if you're a 200 megawatt project in a 90 gigawatt grid, you can only do that much. But so either standalone storage comes at various points in the grid, or PV co-located with storage, or PV wind and co-location of batteries. So all of this would make sense. And on your question about capex, I think it's more technology that we should discuss, because that's where the real revolutionary stuff is happening.
What is your approach in Central and Eastern Europe, like in countries like Poland?
Yeah, I mean, so we, in one of our investee companies, which is called Resolve Energy, based out of Prague, it's developing a 230 megawatt solar project co-located with a 240 megawatt hour storage. We also have wind projects in Romania, which we are developing. So the thesis is quite simple. At the point of interconnection within your grid, are you able to see a sustained business case for you to dispatch electricity for the next 30, 35 years without batteries? Maybe today, yes. And so developers, everybody is thinking, can we get permits in advance to potentially put a battery storage system, not today, but maybe in 5 years' time. So again, with the modular nature of storage, you can always put it, but I think it's genuinely I think one of the other things which has recently happened is the grid instability in Iberian Peninsula, which has clearly shown the fact that there are various challenges the grids are managing, and with the increase in renewable penetration, this challenge will become furthermore. As an investor, we invest in generation, transmission, distribution, everything. And so we see a much larger view about, not just think about this one asset that you develop, but the global footprint.
Then maybe because you say you look at the big picture, you could buy just standalone BESS on one side and have some sort of standalone PV on the other side, or you could have a co-located plant before the meter, right?
Yes, because at the end of the day, there are two things. Your PV project can face curtailments or interconnection issues at the PV plant level. Your BESS project is obviously going to serve the grid. So yes, you can not co-locate and have separately located, but you just need to think about standalone, whether it will then make sense for each of these assets to perform what it intends to perform. Obviously, co-location has some capex optimizations. You don't need the substation and everything else has a benefit of that. Your security, O&M parameters are very well defined. But yeah, I think whether co-located or separately located, you will have to still study the whole system and where you're located in the value stack.
Yeah, I wanted to expand on the original question, and I actually agree with Jan and Max. Standalone PV is not dead, speaking from the German perspective, certainly not dead. We come off from a record year, following another record year before. So PV is going strong, and we still see investor appetite for standalone projects, for sure. But let's face it, things are changing, and the market is moving rapidly to battery storage, and more we are preparing the projects to be co-located. But yeah, it's easier said than done to say, oh yeah, now we need co-located projects. It's not like you snap your finger and you have a co-located project. You need to take care of that on the permit side, on the grid side. So as we Germans like to say, the devil is in the details, and yeah, but the industry is moving quickly towards that.
And on the revenue side, and there's a lot of devil in it, a lot of details there too.
Okay, maybe I can also add some things. So totally agree with you. So, however, the important topic is it depends on the country and the region. So we still see, yes, some of the countries, they decrease the PV projects, or they are going to the co-located projects with BESS because they are looking for more flexibility in the market. However, some of the countries, they start to having a PV. So I see in UK and some different countries, there are lots of the PV projects these days. I'm also looking from the manufacturer perspective because, as you see, they are doing so much improvement in the solar cells. So with these improvements, you see that you are saving so much money with the good efficiency for the project. So they are still doing their job, and it makes the project still, interesting. However, some of the projects, they need to have co-located BESS. They are going back to the development because they see that it's not interesting, these projects yet. So it's not dead, but we need to make it more flexible that it needs BESS.
Anything about standalone PV in Spain?
Yeah, thanks. You read my mind. So I think there are, I appreciate a lot your question, because it's good to push the boundaries and stretch all the minds here in this scenario. But yeah, I think that there are different aspects. When you make a project viable through a PPA or through an auction, of course, that demand is there, it's naturally regulated. But when you've relied on full merchant projects, especially in those countries where there are now a lot of negative prices, that it has been said previously, in another roundtable. Well, then is where your business case starts to struggle, because if you rely on 30 or plus years of PV revenues, or with these negative prices there, or zero prices throughout all the summer or spring, then it's a big issue, no? And from our side, we are a long-term operator, so we keep our assets, and that gives us a different perspective. And I think that from the utility side, we do see a loss of value of PV. And on the other hand, wind farms are more demanded because their capture price in the end is higher. So maybe it's not going to be the end of PV. Of course, the needs are there, and we need to ramp up investments there. But there's a moment now where signals are not good enough. And this is something that needs to be solved. And private operators, we cannot change the market dynamics. So something has to be, we can adapt. We can collocate batteries, we can see different ways, different configurations, etc. But the truth is that the booming market has ended now, at least for PV, and now this consolidation phase, as in every sector, it happens in every industry. So now it's a moment, as all the colleagues have said, call for more thought, for more diversified portfolios, a different perspective, and if you operate project by project, then maybe you're going to be struggling if you want to grow. And you will be more picky in your projects.
Okay, thank you. Let me ask the question to the audience as well. Anybody wants to say something about this? You can raise your hand. The topic is photovoltaic and BESS. You're at the conference for this. So the question is, what do you think about standalone PV? If it's good business case, not good anymore, what would you do?
Good morning to everyone. Marco Furtado from Aprà-Transaction. So I'm a huge advocate of co-located solutions, and more we're seeing that if permitting is an issue, eventually you can use a DC solution to overcome that and use the grid permit which you already have. So in Germany, like we are, let's say Aprà-Transaction is one of the few that we already have project implementation on that with a viable solution. So definitely like co-location is the future. Before we saw the impacts of the negative hours, this is an easy way. And we're also seeing that the prices of battery are going down tremendously on the sense that systems of 4, 6, 8 hours is a reality with storage.
Thank you very much. Chris? No, what's Marco? Thank you, Marco.
Maybe I can add something. I really like the comment, and I think we will definitely head toward this direction. But I also think there will be, especially in Germany, maybe 1-2 years, where we see also a transition. And it's interesting what you say about Spain, because Spain definitely is suffering on PV pricing. In Germany, we have been traditionally very fortunate with basically a subsidy that is just looking into produce the maximum. But what we are missing in Germany yet is looking into other commercial structures than just produce the maximum. And this is something that in Spain has happened in the past, where you looked in like more fixed volume structures, where also the project would take some risk. And I think this is happening right now in Germany for standalone PV, where you do not only like sell classical pay-as-produced, but maybe a fixed hourly profile. And yes, we have to get used to take on more risk as from an investor or asset point of view than we have had over the last 10, 15, 20 years.
Thank you. Oh, absolutely, absolutely.
Hi, it's Frank Decker. I'm really interested to understand the panel's view on cannibalization of standalone battery systems. We see that when they introduced in the market very quickly reaches saturation for new installations. So, please.
Yeah, I'll start on that. So I think what you'll see eventually is that the batteries become traded assets run by traders in a way. So, I mean, at least in Finland, as it started, when we started the business, we're speaking with, you know, everybody, private equity funds, pension funds, infrastructure funds, whatever. We come from trading background, oil trading, sorry everybody, but we come from oil trading background, and so the way that we see it is it's storage trading, right? And at the end of the day, the traders are going to be the ones that are going to be the best at trading the assets. So 1 hour systems will quickly become, I think, obsolete, at least as it in places where there's, I guess, open access in a way. A closed access 1 hour system can be fine. I think those batteries will be outcompeted within a couple of years. You'll have to be adding making it a 2 hour, 4 hour system. The best operators in the market are going to be the ones who can optimize the assets in the best way. And I think at the end, that's going to be the most sophisticated traders. So in terms of cannibalization, look, if you're an infrastructure fund, you're very passive, you have a 1 hour system, it's small because the markets are getting bigger. You're going to be, I mean, ideally you make your money back in 1 or 2 years and then you're fine, which of course happens. But if you haven't done that, and that's what you're planning, I don't think you're going to last very, very long out there. And as one of the guests here said, I mean, the battery prices are coming down. Eventually people are going to say, you know what, I'll build a 4 hour system instead of a 2 hour system, and then it's going to be a 6 hour system. So I personally, that's the way I think it's going to be. I don't know if anybody else.
Yeah, sorry, Jan. I wanted to expand on the question on cannibalization and also drop some numbers. Just for Germany, we have now 105 gigawatts of PV in the system by now. We have 20 gigawatt hours of battery storage, most of which is residential. So only about 2.5 gigawatt hours is large-scale utility scale. So not much really. And on the other hand, the industry now, and this industry has proven to be very dynamic and very reactive and quick. And the industry is now rushing and moving towards battery storage. So we hear some crazy numbers. There is 340 gigawatt of grid applications only on the transmission level, so only on the highest level. And on the distribution level, there is at least 100, 200 gigawatt more. So it's crazy. Not all of these will result into projects. But it's not a question if there will be cannibalization. It's the big question when and how fast it will come. And yeah, other than that, I agree. I think the market right now is already at 2 hours of storage system. And my personal expectation is it will move beyond that. We are seeing that in other markets like California. It's moving to 4 hours, maybe 8 hours, just to capture the solar peak and move it to the evening times of high demand.
Or Italy. Italy only goes with 4 or 8 hours now.
Yeah, yeah. So first of all, I wanted to thank you for the question, because I think it's a very important issue, and I want to thank both gentlemen here for expressing their mind, because I think we're touching on something very, very important mentally also. I mean, what is actually happening is that battery storage, quite naturally, from the developmental view, resembles PV, because it's, these are very similar procedures, you know how to do it. And quite naturally, renewables developers got into the development of battery storage, and that's the good thing. The bad thing is that battery storage operationally is nothing like renewables, and we still think about it as an additional renewable asset, which is not true. So
unless you're a trader.
Yes, like there are two, the big deception is that I would say the battery storage, obviously, okay, I will not use that exaggeration because it's too exaggerated, but please bear in mind, the big danger of battery storage is that it's deceptively simple in terms of development, in terms of calculating your revenue, and in terms of operating, it's much more complex, and probably you would do best if you get somebody who's experienced in that and who will do the calculations for you, because it's a totally different beast. So if you think you will run your battery storage as an IPP who used to go merchant with their PV, this is the wrong way. And it's not that you're losing 5% of your revenue. You will be losing 30% of your revenue, and the market will change. And the best thing about battery storage is that it can adapt to the changes to a certain degree, but it has to be done by someone who has the capacity, infrastructure, and algorithms. So I think this is the answer to your question. So that the battery storage at the development level, what we can see, we see this big rush into the battery storage space, which is for some because they're in the panic mode, for some because they think is the next big thing and they will develop it and live happily ever after. Whereas the big problem, or I would say the big complexity, starts with calculating where your revenues are and then delivering those revenues. And this is something that a developer, who's a pure developer, will not be able to do by themselves.
Yeah, interesting to see what Actis also thinks.
I fully agree with all the panelists, what they've said. I think just wanted to distinguish the roles of these different battery storage systems. While they do all the same thing, which is basically store energy and dispatch, they can have very different purposes when it comes to standalone battery storage services in the grid or the transmission or at the distribution level versus the one which is co-located at your project. And we do projects across the world where we are doing co-located, we are doing standalone battery storage systems in Japan. And the ones which we are doing standalone battery storage systems, they are mainly meant for, rather than trading purposes, they are meant to do the grid augmentation. Because the grid operators, I don't know how many grid operators in the audience, but they are really facing a challenge. Their grids haven't been updated for the last 150, 200 years. we are sitting on these grids trying to, introduce more and more complexity every year with great, success of renewable penetration. And they are watching this in a great amount of fright because they need to manage this balancing act of trying to enable to get the renewables as well as maintain the grid stability. So there will be a role of standalone battery storage systems just on the grids where the grid operators and the distribution companies are trying to manage it. And the ones on the renewable energy space are the ones which I fully agree with the panelists will be the ones which are for trading. And I think we have to start thinking in terms of how do we maximize the utilization of battery storage. It can do a lot of stuff. It's very flexible, but it cannot do everything. And there is a chemistry behind it, and the electrochemical reactions have a limit to what they can and they cannot do.
Maybe just one comment, my comment about this, I think there is a bit of FOMO maybe in the industry from those that have not gotten to operational assets or are close to ready to build yet. And they say, okay, should I do it now or is it too late? Once I get to the market, it's gonna be fully cannibalized. But I think that this type of reasoning is missing a bit the forward-looking aspect, so that the load is, if you look at the projections of the load of how much electricity we're going to consume in the future decades, it's skyrocketing, right? So probably before we can reach that cannibalization.
Yeah, I mean, in Finland, where we have the majority of our projects, when we started this in 2022, 2023, the questions we got were, can Finland even handle 200 or 300 megawatts worth of battery storages in the system? And now the question is okay, is 1 or 2 gigawatts of battery storage, is that going to be enough? Because there's so many data centers being built. There's so many. At first, it was hydrogen, which I don't think will get built in the way that anyone thought it would get built. But for sure, there will be increasing load in the system. There's actually solar in the north of Finland because it's sunny a few months of the year, I guess. And so basically, we're not talking about 300 megawatt in terms of saturation or 400 megawatts in terms of saturation. Back when we were marketing, 200 megawatts of projects, we're talking, multiples of that. And so that's a good point, is to say the load or the size of the system will increase. So people should be looking 10 or 15 years out, not does this battery storage pay back in, 3 years with a 30% IRR. You should be thinking, how's the system going to develop and how's it going to evolve over time, given electrification? So, I mean, our view is that it's only going to get bigger, maybe not everywhere, but in certain countries in Europe for sure, and parts of the U.S. and parts of Asia as well. But yeah, it's a growing pie in a way.
Maybe allow me one comment to this. And I really enjoy this long-term investor point of view, because this often in our discussions that we have regarding projects comes a bit too short, and this cannibalization that was mentioned is much more on the ancillary services markets, because they are really limited in a certain point of view, and you will see maybe a couple of years where you can make your profits there in the majority, but then in the longer run you really have more trading point of view where you go into the deep markets, day ahead intraday, maybe some imbalance prevention. But this is really where you're gonna have revenues long term, and where also you need to see how seasonal changes affect your strategy. And that's usually not something that a developer or a classical IPP business would be doing. And that's why you need optimizers helping you to adjust your strategy, not just on contract to contract basis, but really more on a day-to-day, hour-by-hour basis.
On the one hand, yes, but on the other hand, Preyavart, you said something very wise, that batteries are all about flexibility. This is what I was saying, that this is not a typical generation asset, yes? So battery storage, from our today's point of view, is we think flexibility or trading and flexibility, but then we start stacking already, yes? Then we already start stacking, which means we already attained the first level of complexity. In 3-4 years' time, we don't know what will be, but maybe in 10 years' time, we don't know what the needs of the grid will be, yes? But we know that the batteries will be about flexibility, so there will be some services that probably the batteries will serve, because flexibility is the inherent need of the grid. So at the end of the day, you have to have some faith in the batteries, which I know is difficult from the Excel point of view, but then again, you have to sort of be able to think creatively how to secure real revenues, and I'm absolutely convinced that we still don't know about some revenue lines that we will be securing in 5 years' time.
Maybe let's jump to the next question. What do you think, guys? So we can
I just wanted to add, again, I agree here. So there will be revenue streams that we, as an industry, don't really think of right now. So one good example, I think, is reactive power. Is massively underappreciated and not talked about a lot because it's such a weird electrical engineering concept. But yeah, I mean, modern inverters, so modern battery power plants can provide reactive power. And this is just one example where I believe the market is going into Jan's direction. And there will be other similar business models that we don't really know. And this is the element of risk for an investor, for an entrepreneur. So I'm convinced that in the future, if you have these assets, you can do so many things with them. And so there the risk comes in, and the faith in the long-term perspective beyond the maybe 5 years, 20% IRR perspective that we still see a lot in the market when it comes to standalone batteries.
Thank you, Hannes. So let me go to the second and I think last question as we are running out of time. So we were all sitting here or all working in the industry also 1 year ago, and most of the panel was sitting here 1 year ago. So what is the difference, or what are the differences that you see from all the stakeholder perspectives? So developer, but also lender perspective. Everybody is talking often to lenders. Pexapark, like, investor, what is your perception? What has changed in the last 12 months?
So maybe I can take it, but from the EPC perspective, I'm talking. So what we see is we are receiving so many BESS projects these days in market. Some of them they are standalone BESS, and some of them they are co-located. And the main reason is increase of the demand, as we are talking, because of the grid needs flexibility in the market. So this BESS solution brings this flexibility. Also, what is important here is BESS itself, it's improving from the last year. So now you have really better efficiency of the, batteries, and you have, it causes you to have a stable prices in the market. But in the other hand, this complexity, it's so much difficult because you cannot find, there are lots of people that they know how to design these solutions, but it's quite difficult, to find somebody to have expertise to design a BESS in a good way. And also, if you want to connect it with to have the co-located with BESS and the PV, it's quite, you need different, expertise that you need to work with manufacturers, have a coordinations with them to see what is, what is in the market. In the meantime, you need to check the grid codes, to see if it's matched with your system. So it is kind of really things that you need to focus and work on it. But I see it's really improved from last year's. But there are challenges, different challenges in the market. I believe that, okay, BESS now is good. However, BESS is not working alone. So you still have challenges regarding to different materials. So it have a long lead item on the project. So these are the reality when you are going to build the project.
Yeah, I can say from my perspective, 2 years ago, nobody really wanted to talk to us, kind of from a financing perspective, or it was super difficult, and hundreds of hours literally of trying to explain to somebody what an ancillary services market is, what does it mean, what's ready to build, do you really have permits, all this kind of thing. Now actually I think investors understand it a little bit better, and so you don't have to spend as much time. You just say this is my project. I mean, it helps that we've done multiple projects, and so they know that this isn't kind of like a fake project where, somebody just has an application and an option on a piece of land, which I'm sure everybody here sees. So From that way, it's kind of it's a bit better. There's a lot more knowledge, but still, I would say it's getting a bank to finance anything is difficult. Although it's improving, I think in Germany it's much better than in the Nordics. But otherwise, yeah, I think it's improving on the one hand. On the other hand, I think probably it's tough for some of the investors to understand what's a real project, what's not a real project, what it means to be ready to build, what it means to have actually the permits, the grid code requirements. So where we think we kind of needed to learn what we were doing, we come from kind of oil refining background, understanding CapEx, very, very extreme technical conditions, was to make sure that we design everything correctly, we have proper designs, we get everything permitted correctly. And so on the one hand, yeah, it's a bit better. On the other hand, I feel like, yeah, the investors are being pulled in different directions by people just coming up with, you know, here's my 8 gigawatt pipeline, how much of it is real and how much of it is fake, right? So yeah, anyway.
Okay, so from my perspective, I would say slightly provocatively that last year there was a lot of excitement but at the same time uncertainty about battery storage. So first people were moving in, and this year, at least in my field, the battery storage became the catch-up of the PV industry. If the project doesn't fly, let's put some battery storage on top of that, and then it's gonna work. So I just wanted to appeal to everybody, it doesn't work like that. So calculating whether a battery storage will improve your PV case is a complex task, and actually this is my everyday reality right now. So I have like this, I get this pipeline of projects that sort of the IRRs are not there, and I can see just PVs being dropped, bombed on them by the...
I fully agree. And my question is usually like, okay, how did you size this battery system? Yeah, whatever, we just add.
I wanted to add to that. I feel for the people because we only do the standalone battery storage, and we kind of, you know, we have all of our models, we have our consultant curves, we have all this, and it's, I would say that's far easier to do mathematically than a co-located PV and battery storage in Europe, in Northern Europe at least, where there's not that much sun, or the sun is variable, or whatever it is. One of our, we're building actually a battery near a big solar plant in Finland, and they were asking us, you know, how does the math work on this? I'm like, I can't figure it out. It's too difficult for me. And you know, in looking at the kind of the option theory around batteries, you know, it's got a very high option value. You know, you have to calculate what's the value of every 15 minutes being able to do your algorithm and this and that, and then 1 day forward, 1 month forward, 1 year forward.
Plus scenarios.
Yeah, exactly. And but the battery with the solar, you know, when it's not in Arizona or California, I think, man, I feel for everybody trying to do the calculations and then get approval of the investment. So.
Yeah, I would like also to add a couple of insights. Well, from our perspective, the market has stabilized in terms of gas prices and electricity prices, etc. That has impacted revenues, and this has been already mentioned. But we've seen from the regulatory side that if previously we had a lot of activity in Brussels, and you know, it was a strong effort to push storage in the, you know, the European institutions. But this last year we've seen a surge in activity in the member state level, and this has accelerated a lot the market. We've seen, I mean, from our side, which calls for a more stable or predictable kind of revenues or more conservative investment as a utility. We have seen a lot of schemes and mechanisms popping up very differently. It's been very fun because it's been, you know, every place a different way or a different structure, but this has allowed to have some perspective for these investments, and has boomed the market of the development market of storage. But on the other hand, we started well, we had a lot of activity in North America, but this is a completely different market. The drivers are different, are not comparable to Europe, and we started in UK there to gain insights and to master the standalone project, which is the basis for, you know, after collocating storage with renewables. And we've seen that local administrations have been also sophisticating or gaining a lot of knowledge and being more demanding on storage. So the first wave of projects that arrived to the UK, and well, these two last years have been very bad in terms of revenues for UK, as you must know. But on top of that, the local players have started being more thorough, looking at projects more thoroughly. And that's a trend that is going to be sustained in place. And that's what we see, that all this pipeline of projects that were, basically land and connection driven, they're quite far from being a reality, because the demand of local authorities, the time they require, etc. Also these support mechanisms that have been appearing, they give you a very short time to connect, to build and connect develop, build and connect your storage. So in this is, with a context of still developing regulation and caution from the administrations is challenging. I must say that Moss Landing was also a significant milestone, significant incident in the storage world. And we see insurance companies and insurers more, looking more carefully at the projects, and this is going to also filter the projects that make it to financial closure or connection. I think there are a lot of things that has happened for this year, but I want at least to give these hints, and maybe my colleagues can also add their perspective.
So you said
sorry
what changed?
Sorry for interrupt the last 2 minutes.
Can we last? Yeah.
I mean, you said what changed in the last 12 months. I don't know where to start. Trump, tariff, so many things. But what has really changed in terms of the storage and the renewables, right? I think a dramatic shift that has happened is that, I think Neal said it, that you don't have to explain your projects in a lot more details. I think people get it. I've been following the storage space since 2017. And we did not make our first investment as a private equity firm until the last, I would say, 2 years. It took us a lot of time because it was not making any sense in terms of the economics, in terms of the technology, in terms of the lender space, in terms of the regulatory environment. All these things need to come together to really make it happen. I think we are getting there. So I very quickly would say, in terms of the regulatory environment, most of the markets now have an understanding or a definition of how to operate a battery storage project, which is great. The investors, so equity investors like us or the lenders, get it. We are trying to see and understand that this makes sense. The lenders are getting more and more comfortable with when you're presenting them a solar plus a battery storage project in terms of the economics. Yes, complicated. Nobody knows what's going to happen in terms of exactly if all the developers start developing battery storage and co-located solar projects, what is the impact of that on the grid? I think Pexapark was best placed to answer that. But a lot of modeling will need to happen on that.
How do you account for the revenue curves for BESS?
It is extremely difficult. I'm not going to spill the secret sauce, but it's a lot of scenario modeling. You are going into Monte Carlo simulations of, I don't know how many million times, really just to figure out what exactly are the upper bounds and the lower bounds of your reality. And trust me, they all go wrong. So, at the end of the day, you can only do that much. So you're preparing yourself in terms of the resiliency of scenario modelings and trying to see that, which are the cases that actually break you. That is the key point. Not the ones that actually will just, a little bit of less profit or more profit, but the ones that actually break you are the scenarios that you test.
How much, as an equity investor, do you value contracted revenues on?
Massively. Okay. Massively. So if somebody told me, we can get a discounted contracted revenue, and if it still makes sense, we will take it. Most of our investments are based on that. And the reason for that is not because we as private equity investors, our preference is to have 70 to 90% of contracted revenues. Yes, there has to be some merchant. We have, you can definitely deal with it. There is an upside to that thing as well. The volatility brings returns, but it also increases the risk. So it's a risk-adjusted return that we go after, and we look at it in terms of what is increasing our risks. But just going back to your question again, in terms of, so lender appetite massively improved, equity investor appetite massively improved, technology, LFP batteries have just taken off. So the estimate is by, in the next 2 years or 3 years, 90% or 95% of all energy storage solutions will be LFP, which is lithium iron phosphate batteries, compared to NMC, which was nickel, manganese, cobalt. But while I say that technology has done a great job, technology has matured, there are still, let us please all be quite open about it, there is no battery storage project that has been operating for the last 20 years to test out in the real situation. So yes, there are accelerated testings and stuff like that. There are fires in California. I don't know how many people have heard about that, of battery storage projects, which has caused a real concern in the region. And so as an industry, all of us, not just manufacturing, but as an industry, we all need to be aware about the risks. With the flexibility that we want batteries to generate, there is a risk that this rapidly fast-paced technology evolution will bring its own challenges, and something that we all need to be aware about. But we are doing the world's largest under-construction project of co-located battery and solar. It's a 4.5 gigawatt-hour battery storage project, plus a 3.5 gigawatt solar in Philippines. And so the reason I refer to that project is that Europe really needs to start thinking about that's the kind of, so with that project in Philippines, we are giving 12 hours of base load, 800 megawatt power. It's completely, it's a peaker. It's a peaker project replacing a peaker. So, how many of those projects are happening in Europe? This is what we really as equity investors are looking for. Where are the opportunities to get these mega co-located solar and battery storage projects in Europe? And that's what we are looking at. There are some really good prospects, but that's our focus.
Thank you.
Maybe also...
Sorry, I think the time's up. Sorry for that.
Time's up?
Yeah.
Do we have time
Just
for...
make a quick conclusion.
One conclusion, quickly? Do you want to... Important?
I was a bit sad just hearing the very global, big investor point of view, because I think there's probably also smaller companies that have to contract revenues and look into commercial structures, and how the industry has advanced really is market dependent, right? So UK, we are literally discussing now more merchant structures, maybe floor structures, whereas 2 years ago, mainly tolls. If we look at Germany, this is a very new market, but we're discussing commercial structures. So that's an advancement from last year. I think last year we haven't really done this. And I think in your discussions, you just need to be aware there is not a contract setting for your revenues. There's all open for discussion, and you need to sit down and find out what implications your commercial structuring has on your revenues. And there's so many options depending on standalone, co-located, and so forth, that all have impact on your cash flow. And in the end, you need to get your cash flow right to go to the lender and show him what you have. And this valuation of cash flow is very difficult. And apart from the equity part that has to fit in your project, the valuations will help you convince the banks. And that's, I think, where we have to get better.
Thank you, Max. Thanks, everyone. I hope it was interesting for the audience, and I think we can conclude it here.